Hello, my name is Steve Bigelow with the Candlestick Forum. Today we had a Doji day in the Dow and or in the indexes. A lot of people ask, what is a Doji? A Doji is one of your most prolific candlestick signals. It's very identifiable. It's where they open and close approximately at the same level. Notice how the morning star signal was developed with a big down candle, a day of indecision, which is what a doji represents, and then a bullish candle making the morning star signal. Today we had kind of a doji day. Now the Dow did more of a spinning top. Now a spinning top is just a doji with a little bit bigger body, but it represents the same thing. There's indecision between the bulls and the bears. But knowing what to look for after candlestick dojis makes your trading analysis much more accurate. So today we saw the Nasdaq form a doji right smack dab on the 50-day moving average, with stochastics climbing up toward the overbought area. What's the doji rule? Very simple. The price will usually move, or the trend will usually move in the direction of how they open after a doji. The Japanese rice traders say if you see a doji in the overbought area, if it opens lower, close out the position immediately. Or in the case of the Nasdaq, if it opens lower, it's pretty good evidence they're not going in this direction. They've failed at the 50. This is the information built into each candlestick signal that allows investors to much more accurately tell what's going on in a price movement, knowing when to buy and when to sell. Whoops, that one didn't get dismissed. So here are the situations that occur with candlestick signals. The most powerful reversal signal is what we call the best friend signal. It's a doji followed by a gap up, especially coming out of the oversold area, and in this case also closing above the T line. That tells you there's been a dramatic change of investor sentiment moving in this direction. The reason we call it your best friend is because it's got three aspects to it. One, it gives you an extremely high probability you're moving in this direction, or a bullish direction. Two, the magnitude of the move is usually extremely strong. And three, even though there's stronger candlestick signals, or as strong candlestick reversal signals, the frequency of the best friend signal makes it that you always have a constant supply of best friend setups that are going to give you strong price moves. So anytime you see a doji in the oversold area, that's usually illustrating there's starting to be a change of investor sentiment. Anytime you see a doji in the overbought area, you've got a very simple rule. The price will usually move in the direction of how they open after a doji. That gives you a lot more leeway that if you were long Amazon and it started trading lower tomorrow, you could take your profits and move on to something else. Netflix. If you were long Netflix and you can see that there's a resistance level right here and you did a doji Harami. Remember, a Harami tells you that the selling or the buying has stopped. And if anytime you see a signal that incorporates a doji in it, it's going to be that much more poignant or stronger. So if you were long Netflix on the basis you were looking for it to break out, and they open this lower tomorrow, the doji rule, that means they aren't breaking out. You close out, take your profits. So this is the process of candlestick signals. They indicate when to get into a trade and they indicate when to get out. Notice our trend kicker signal that told us that there was going to be much more upside. Trend kicker signal is where you already have a trend starting. It opens here and closes here. The next day they gap it up and move in this direction. A very strong indication you're heading higher. Where are you heading higher? Probably to the next level everybody else is watching, the 200. Notice we did a doji today in the overbought area. Makes this very simple. If they open lower tomorrow, you take your profits because they're probably at least coming back to test the T line, which tells us right now they're not going up through the 200-day moving average. Candlestick signals are very easy to analyze. The inverted hammer signal on Dave has put us in this position with very easy analysis. The inverted hammer signal, when it confirms positive, and this is, again, nobody's statistics except my own after watching it for 30 years, that if it opens positive after an inverted hammer in the oversold area, you have about a 95% probability or greater that you're going to be heading in an uptrend. Today, they did a shooting star. Now, after hours, it traded up here because of earnings, but they've closed it back down here after hours. That makes this very simple. You put your sell stop just below the low of today's shooting star. If it comes down through there, they're taking profits, take profits. This is not rocket science. This is just using the probabilities of what happens with investor sentiment based upon the graphics that are created by investor sentiment trading. So you can see here, anytime you see a doji incorporated into a signal, look at your doji followed by a bullish engulfing signal. Call that a left-right combo. That's one of your strongest reversal signals. And then we reiterated a buy on Occidental today because look at your kicker type signal, look at your trend kicker signal, and look at your J-hook pattern setting up. When you put all this into one analysis or one visual analysis instantly, it puts you in the right direction at the right time with high probabilities. So this is not hard to learn. It's all visual. Join us this weekend where we're going to be going through what used to be about a 6-hour day on Saturday and a 6-hour day on Sunday, probably looking at 7 to 7.5 hours each day, going through all the signals, the patterns, the top rank signals and patterns, which are a combination of the signals and the patterns, your strategies for improving your probabilities of being in a good trade based upon the entries, when to take profits, how to use gaps in conjunction with your candlestick signals, which gives you the strongest trades, where to set stops, how to do trend analysis using candlestick signals, and how to scan for the best trades. I implore people to take this course or this 2-day training. It's well worth the money. I wish I had this back when I was learning candlestick analysis. I'd be sipping mint juleps on the back of my yacht in the Fort Lauderdale Basin had I learned this 30 years ago. This is not rocket science. This is just common sense graphics of investor sentiment put into chart patterns. That'll be it. We'll see you in the chat rooms.